It's the first day of the new year, which also means that December monthly sale numbers will be released today. It's not looking too exciting though, with brokerage houses and our dealer surveys suggesting that sales may stagnate or actually fall for some of the companies. Ankit Merchant from SMC Institutional Equities joins us right now with his take on what to expect from the month of December. Ankit, good having you. Thanks so much for joining in. Happy New Year to you and your team. But promises to not be a happy start to the new year for the auto ancillary names or the auto companies. What are you watching out for the most?
Yeah, good morning and Happy New Year to your team and your viewers.
Thank you.
Not a good start for the automobile companies. December, as we know, has been pretty much muted and is likely to be muted. However, what we are looking forward is companies with strong dealership network and higher brand recall is where I believe the inventory will start coming off. So that will be the two major factors which we are looking forward. Specifically coming down to companies, we expect Maruti Suzuki to report a growth of 5.4% or near about 6%. And out of that, domestic growth is likely to be near about 7%. And the export growth is where we see a little bit of pain coming in. And what we expect is the export growth to come down to 20%. So that would be a degrowth of 20%. So we expect Maruti Suzuki to report a slightly flattish number for this particular month. Coming to two-wheelers, where we expect Bajaj Auto to report strong numbers. They are likely to be the leaders in this particular month, and they are likely to have a growth of 13.4%, and which will be followed by TVS, which is likely to report a growth of 7 to 8%, followed by Hero MotoCorp, which the growth is likely to be near about 4.5 to 5%. However, the major concern is likely to be in the CV space, where we expect Ashok Leyland to report a degrowth of near about 20%, and we expect numbers to come down drastically for the MHCV segment. And all we also know is that the Ashok Leyland had a strong base in the last year, so the numbers are likely to be much more painful than what is likely to be expected.
Interesting.
So this is our broad mix of our expectations from the automobiles, and yeah.
Okay, Ankit, so 2 or 3 follow-up questions. Firstly, on Bajaj Auto. Now, I heard you mention that you expect a 13% growth. I think the averages of all the brokerages that come out with these estimates seems to suggest that the number could be as high as 23% as well. So am I to assume that if the number is closer to that 23%, which is maybe 18, 19, 20% or even 23%, it's a stock that, it's a number that will make you go out and buy a Bajaj Auto? Because I believe your estimates are about 13%.
Yeah, so there are 2 factors which I'm keenly looking forward. One is the domestic growth. So in the domestic growth, specifically for the motorcycles, we expect a good amount of growth coming in year-over-year. As we know, the change in strategy which has happened, where the company is going forward for the entry-level segment, and it's been really pushing hard to push their sales. So that is likely to to bring the growth. But what we see is the domestic three-wheeler passenger rickshaws, auto rickshaws, where the growth is likely to come down. So hence the mix will grow, but definitely it is likely to come down. Another factor for me to look at Bajaj Auto is that how their export is ramping up. Okay, so what we have seen in the past is whenever the crude prices have come down, specifically Bajaj Auto is supplier to most of the crude exporting nations, so be it Nigeria, Egypt or the other African countries, where the growth comes down significantly. So this is a major risk which I see with Bajaj Auto going forward. Hence we are not very much positive on Bajaj Auto, and we had a target of 2,800 which we released in the last quarter, and we have achieved the target. So we'll be waiting for further uptick in the exports. Only then we'll look forward to look at Bajaj Auto again.
Okay, so am I guessing that I'm guessing you are saying that it's not a buy right now. Subject to certain factors, you'll go out and buy it. The valuation is still not compelling enough for you to go out and buy a Bajaj Auto today.
See, on the valuation front, still it is. I don't say that it is a sell. Looking at it, is not trading at a very premium valuation what it used to trade a year back. But there are certain factors. One, as I told you, the exports slowing up. Okay, which I see, which will be slowing up in another coming months. So I expect Bajaj Auto to remain range bound from this particular levels. Probably, one could start accumulating the stock again back at 2600 or so, and the maximum upside which I see in the stock could be near about 3100. But definitely not a buy recommendation on Bajaj Auto for me at this particular juncture.
Okay, not a buy at this juncture on a Bajaj Auto. Ankit, our estimates suggest that one of the weakest numbers that will come in would be from Ashok Leyland. I mean, even Tata Motors, yes, but Ashok Leyland in particular, the consensus average seems to be about a 14% downtick. What are your estimates? What are the factors? And at this 100 rupee price tick, is Ashok Leyland pricing in the negatives, or if the numbers continue to be weak, then there could be some more downsides to the stock?
Yeah. So specifically to Ashok Leyland, we expect the growth to come down to near about 16 to 17%. That is likely to a degrowth of 16 to 17%. And as I told you, the major amount of degrowth will be through the MHCV, where it is likely to decline more than 20% for this particular month. Okay, coming to the valuation part, and at this particular price, has the stock factored in? Yes, I certainly believe the most of this negative has been clearly factored into the stock. Hence, we have seen, the most of the auto companies in the last 1.5 or 2 months, most of the auto companies have rallied from their lows. But Ashok Leyland has been stuck over there, which has been factoring these particular issues, which the industry has been facing. The primarily, as we understand, is the slowdown, and because of the liquidity crisis, which has impacted the CV sales. So yes, at this particular price, if one looks at it, yes, the most of the negatives have been priced in. Yes, there could be certain factors which can pull the price down. But if you ask me at this particular level, I would definitely be a buy on Ashok Leyland. In fact, we are still buying Ashok Leyland with a target of 134. And what we expect is this particular slowdown is likely to continue for a month or probably 2 months. But in the month of March, what we have seen, usually for most of the CV players, the numbers pick up very drastically. Okay, so what we expect in the month of March to the demand which has been postponed to come in, and as we know, the BS6 norms is just around the corner. So a lot of pre-buying is likely to come in the next particular FY19 in the year. So we expect a lot of growth, which will start factoring, and the companies will start moving up. So hence, Ashok Leyland could be a very good buy for a particular investor who can hold for at least for 6 months and can keep a target of 134. A minimum of 134 is what we expect. Yes, the concern on the MD who's leaving in the month of March is likely to hang on the stock, but again at this particular price, it seems very sweet for me to enter the stock. Right.
Okay, interesting. What's your top idea from the auto space now, looking at the numbers that will come out and the valuations that the stocks would be trading at? So
top ideas, as I just said, is Ashok Leyland. Okay. In fact, that is the best buy, I think, in the market right now in the auto space. So
let me rephrase my question then, Ankit. Let me talk about a pocket that a lot of people are bullish on, and I want your views here, which is the tractor space. Yeah. Do you believe Escorts and M&M provide decent value, looking at the numbers and the valuations again?
So yeah, coming to Escorts, I believe, a lot of growth will start coming in, as we understand now that the Prime Minister is likely to focus more on the rural and the farmer segment. So where we expect, the lot of, as we understand, is a farm loan waiver which has been going on, and many other soaps will be offered to the farmers. So hence that will likely to drive the tractor segment, both for Escorts and M&M. M&M specifically, I like it because again, the Escorts is one of the tractors is one of the factor. Second is the product pipeline. We have seen that with Java, which has been a runaway success from the start, and there is good amount of portfolio coming up. They are launching 2 new vehicles again in this particular month. So we expect Mahindra and Mahindra to be among the best focused stock. At this particular price, again, one can enter the stock. However, one can look at adding this particular stock whenever it comes down. But what we have seen, it has rallied a bit from its lows, and one can keep adding this particular stock on all the weakness.
Okay, Ankit, thanks so much for joining me today and giving us a lowdown of what to anticipate from the auto sales numbers. They'll start trickling in anytime soon, so we'll let you leave and wish you a happy new year.